Very good evening, traders. Welcome back to my channel, Smart Index Edge. I'm Narinakshi Swami, analyzing the Nifty for tomorrow's trade. Let us analyze what has happened today. Today was the continuation of the down move. This is Tuesday and this is Thursday. Expiry, monthly expiry, lot of volatility in the market. Initially, you can see I'm on the first 5-minute candle, 5-minute time frame. You can see the first 5-minute candle ranging from 24,697 to 24,575, nearly 140 points. Yeah, 24, yeah, 128 points. 128 points in single 5 minutes. Only a scalper can enter into the market, enter immediately into the put option, and they can take the trade. I could not take the trade because it is a huge move. When there is a huge range, one should never trade this range. People do the mistake of trading this huge range. And the next 5-minute candle, you can see just 5, 10, 15. And the second 15 minutes candle, it is an almost reversal. From there, market started reversal. If you are not very quick enough to cover your position, then you would have landed in problem. Only you need to enter into the market, whether you are a buyer of a put option or a call option. You need to see when the market gaps down and huge move down, there will be exorbitant price of the put options. It will be very huge. And volatility is also huge. So if any small mistakes will make you to take losses into the market. See, even on the 1-minute time frame, also if I change the time frame to 1 minute, this is a huge candle. 1-minute time range is 24,612 to 24,699. Almost 80 points range. 80 points range. People should not do that. Actually, traders do this mistake, entering into the pressing the button into the, because there is no value for any put option. It becomes premium there. If there is no value for entering, you are not entering into a discount price, so you are not going to miss the trade. If you would have waited very patiently, you would have got trade in the afternoon around 11 to 11, 12, 11:37, you got the trade. The same put option, this is the put option, 24,700 put option. I'll show it to you. This is a huge move, and it came down to the level from where it had started. Points 125, the low was 103.4. And you can see over here the low, 1 minute. Let me change it to 15 minutes. Then low, if I place the cursor, you've got the low around 115. This is the right place for any buyer, option buyer, to wait for the discount and enter into the trade. So you will be entering at the safe place. And your stop loss will be very minimal. Your stop loss will be very minimal. You will be entering into the trade. Suppose if you are entering into the trade around opening bell itself, your stop loss. Let me show it to you. See, this is a huge candle ranging from 105 to 165. Your stop loss, where it will be? 165 to 100. See, from the 105 to 165, almost your 60 rupees stop loss. You should answer me, only a scalper can do this. Scalper can do this, and some people, very aggressive traders, what they do with lot of money, they will average it and they will get out of the thing if they have huge money. So one should not indulge in such type of trades. This type of trades one should not indulge in entering into the trade. Patience always pays. Actually, market came down, the direction was down, and you can see from here, from 115, or if you would have entered around 125, the final target was 210. 125 to 210, you would have captured 85 points without any tension, and your risk will be very less. With the very less risk and with the very less stop loss, you will be entering into a safe trade. I'm not going to discuss about the trade because the trade, what happened in the market is actually it was a trap. It was down move, very quick down move, and a V-shaped recovery. All this, whatever the people has been traders, sellers have been induced into the market and buyers were induced. So it is a V-shaped recovery, and the price action, it is just like a folding of the cloth, like this. 1 minute, sorry. It was like this. It came down like this, and just like this, folding of the cloth. Then, what is the price action over here? It is nothing but a range actually. The market has traded within the range of 24,698 to 24,484, finally closing around 24,500. And the close is bearish below the open. So if I change it to daily time frame, it has almost come to the level here, August 12th level is 24,465. August 12th level. Today, it tested the level of 24,481, and the market has continuously come down since 2 weeks. Since 20th August, 21st August, the market has started coming down, and it is near the monthly 7th. This is a 12th August level. It has come down to that level. And from here, you can see the multiple times. You can see on 7th August, market has tested the low of 24,344, and on Friday it tested the level of 24,337, and on Monday 11th August it has tested 24,347. So it is multiple times this level has been tested. Probably if the market starts going below this level, it becomes weak, because since it has tested multiple times, there will be static liquidity available in the market. Static liquidity Let me type in this. So money is flowing under this. Long-term traders have their stop losses and it is flowing in the market. So the market can try to grab this liquidity, come down and grab this liquidity. It could have gone down. And here there is a level actually 24,178. The market can do, it can come down. Tomorrow is Friday. Classically, all Fridays were down days. We need to see, but the only change in the market is this time the expiry has been changed to, instead of Thursday, it has been changed to Tuesdays. Nifty expiry has been changed to Tuesday. So the market has almost discounted. So only if I say Friday, Monday and Tuesday, only 3 days are remaining for the expiry. So weekly expiry, only 3 days are remaining. So out of the 3 days, market has to adjust its position. Probably some sort of reversal we can anticipate in the market. Market initially go down to, these are the levels, 24,405 to 24,445. Why these levels? Let me go to the 2-hour time frame or the 4-hour time frame. Let us check on the 2-hour time frame. If I change the time frame to 2-hour time frame, see here the market, this is the flip zone. That is 24,472. The roof has turned into support. That's why it is a flip zone. And almost market has come down to the 24,474. And also another flip zone is little bit lower, 24,475. And one more level to watch is 24,405 because this is the base. Here market has come down and tested. So there are 2 levels to watch out for tomorrow, 24,445 and 24,405. Suppose if I see on 2-hourly time frame, you can see the market has closed. This is the last 2 hours. So 4 hours are there. First 2 hours and second 2 hours. So this is 115 high. That is 24,593. If I take this, the balance line is around 24,530. 24,530 and the market is showing some sort. Any dip towards this level, these are the important levels, flip levels, 24,469 to 405 will be a discount for you people. Probably if we see any reversal, market may try to trade up to the level of 24,657. So based on the India VIX is increased to 12.69. So based on that, the level to watch is daily high to be 24,657 and daily low to be 24,344. I am talking about the tomorrow's trade, but the trend is bearish on the market. The market finally, it may go down below this level. Go down below this level. There is liquidity over here. I don't know when it is going to go there. or whether it will be within this weekly expiry, that is on Tuesday. It can, if it grabs this liquidity and sometimes if it takes reversal, then we can anticipate for another leg of up move, because this is the what the market has done is, if you see the structure, over here, this is a lower high. If it comes down and it can make another lower high. It can travel up to this. It can trade like this too. So it will not be a one leg, one go down move. We need to see whether if it stops over here and if it forms a double W bottom, if it is a W bottom over here, let us anticipate for that. Then if it crosses this 25,219 on the longer term, market can trade higher. We need to closely watch these levels around 24,344 to 24,200, within the level of 24,086. If the market takes any support for a long term, the market can see a reversal in the market. But at present, for tomorrow, the price action may be within this range. It may not breach this level in this week. Friday's level, it may be within this level. Either it may be 24,405 to 24,410. 24,344, even it can come down. It is the VIX level. It should not breach this level. Usually big money will not breach this level. They will stop within this range and they will induce the buyers into the play. This is the play, actually, it will be done. And market may try to retrace 50% of this. See, you don't see any, after this fall, there is a pullback up to this level. If I measure this is 186 points pullback here. There is no market as from this level, market has come down without any pullback. You must notice that it is a single leg of fall. There is no pullbacks or secondary trend. So there is no, that's why I am anticipating market may stop within this range. Market may try to trade. See, if I take this, 50% of the thing will come to around 24,657. Whether the market will do at a time in one go? No. It may not do that. Actually, it may come down a little bit. Suppose if it comes down to here, and it moves, that will be 280 points move. 280 points move can be compressed within two days. We need to see whether the Friday will change its pattern or go down and close near the high. If it starts moving, in case if the same pattern is repeated in the market as it was on every Friday, then market may try to move down below this level. It can go past the 24,344 and it can breach this level too. If it breaches this level, the weekly low level that is the weekly low level. So if it has to breach this level, that will be around total 277 points. And if you see the daily low level is around 193 points. So we should be ready for that because we are seeing the weakness, imbalance. We have seen this type of imbalance even here also. And let me go back here. You can see back to back, the market has moved higher without any intermittent anything. It has moved like this. Same way, market is coming down without any pullback. It can do that. It can breach this level. It can breach this level. Suppose if I measure this move, if I take the measurement of this move, this leg, if it is a measured move like this, then we can anticipate straight away market going to the level of 24,086. So finally, we can see the level of 24,086 too in the long run, not for tomorrow. Tomorrow's trade may be because the major support on the option chain, if I go there, the open interest, higher open interest is seen around 40. This is the level 24,300 and 24,500. So even around 24,350. So these are the levels, support zones you can see on the option chain. So resistance, you are seeing immediate resistance, you are seeing around 24,600 to 650. So the VIX levels are proper. It has been calculated very exactly, so we can anticipate the range between 24,344 to 24,657. Suppose in intraday some pullback, they may trap because the correction is not over. The market can breach. Actually, if I come to the Bank Nifty has breached all the levels. You can see it has breached this low and almost this level, and it is approaching this level. So the levels to watch out for the Bank Nifty are 53,477 and first resistance to be 54,163. It is also, this fall is also on the daily time frame. It is like a water flow. There is no single, their profile is very elongated profile without any dent. There is no pullback at all in the market. It is falling like a knife. So there is a support. You can see there is a dozy type of candle formation around this area. Probably the market 53,621 can act as a temporary support for the Nifty tomorrow. Already it has closed around 53,820, 53,621 to 53,477 are the levels to watch in the market. We may some sort of little pullback in the market because it has fallen continuously without any dent. So friends, tomorrow Nifty levels to watch, or you have to note down, these are the 24,344 to 24,657 is the range. Even on the option chain also it is indicating the support and resistance in the market. So you can keep 24,300 put option and 24,600 call option for your trade, and you can watch the price. Suppose if you get a pullback, you can the value you can get in the market. Thank you very much, friends. Nalakshi Swami signing off. Thank you very much.